Hey Ian, we're recording this kind of early morning version of the IanCast.
Yeah, good morning. How's it going?
So it's Friday morning and the future's going crazy. Uh,
Yes.
at least according to the press, there's news of a vaccine that can be mass produced very quickly. President Trump has given guidelines for how to reopen the economy. A number of states that really, probably in some ways, probably never needed to really go into full lockdown will probably come right out of it.
Yeah, I mean, and it's, back when Trump first said, want to open it up before Easter, April 12th, people thought it was crazy, a ridiculous idea. Now, I mean, it's April 17th and we're already giving guidelines about how to reopen. A lot of states are prepping for that, and we're seeing some of the other hotspot countries over in Europe already starting to let workers go back. So it's been much quicker than was anticipated by a lot of people.
Yeah, and also just for context, to just be like the scale of what has happened versus the scale of what was predicted. And I was speaking with a friend, and I was told that what was predicted was even with social distancing, they were expecting millions,
Right.
even with social distancing. So they weren't talking about if you don't do it. So there's definitely something gone pretty wrong here in terms of how this was sort of modeled,
Yeah.
how what's in there. In other words, if you were expecting, I believe the number was 2.2 million deaths was what was forecasted with a high level of confidence.
Right.
That
I,
even if you implement social distancing, this is what is going to happen. And so obviously, if you don't do it, it would be significantly worse. So something has gone pretty wrong here.
yeah. I mean, that number is already down to 60,000. And not long ago, like a week or two ago, they were saying still 100 to 240,000. So, I mean, it's really good news that's just kind of getting swept under the rug and not reported. But it's great that we're going to be able to open stuff way earlier than expected.
I believe that. And so when people, we've gotten some comments for pre-receiving Ian Cast for being a little delusional
Yeah.
in saying that, look, the markets will anticipate, the markets will use the information to make judgments. And so the market has been actually a much better forecaster than the models of the actual intensity, the actual sort of like, how this was actually going to unfold, because the market bottomed out on March 23rd
Yes.
and then has moving up. And then Amber, in our Slack channel, said yesterday that the Nasdaq 100 Ian, is now positive for the year.
Right. I know. Yeah. After like the one of the fastest drops of all time, it came right back. A
And
lot of stocks are up back near their all time or 52-week highs.
right, I mean, stocks like AMD are just underneath the
Yeah.
all-time high. And so, and there's been calls for the next Great Depression, for another 2008, for really kind of like, I call it the end of the world as we kind of know it. There
Yeah.
have been a lot, and they're still out there. There's still people expecting this to unfold in the way that it was modeled now, really like a month ago, when there is no sign in any country, really, even the countries that did everything wrong, of the worst case scenario unfolding.
Right.
And so it's completely reasonable that the markets are now pricing in really a snapback, which is what we told folks with this, a solid V recovery.
Right.
Yeah.
Yeah, exactly. So yeah, there were countries that didn't do any lockdown or anything that are still, they're not seeing that many negative effects. There's no like discernible like way higher increase in cases or deaths in those countries.
Well,
So,
for
yeah,
sure. I mean, for example, Sweden actually never implemented the
right.
lockdown. Their fatality rate is significantly lower. They actually went for something called herd immunity. They restricted people to groups of 50, but largely they went about their lives. And having stayed at home for about a month straight, I definitely see the benefits of pursuing a non-panicked approach. However, I'm sure in time, a post analysis will be done as to what was done right, what was done wrong, and whether going with the very worst case scenario was the right thing. However, let's talk about some of the things that we've been seeing in the stock market. In other words, this has for sure been an America 2.0 market.
Oh yeah, unquestionably.
Yeah, I
Yeah.
mean, look at what's been going up, right?
Right. So a lot of the cyclical stuff. So semiconductors got crushed, housing stocks got crushed, industrials got crushed. I mean, they were all down like 50% or more from the high. The market overall, I think, was like 30 to 35, but these were down way more. I mean, I think some housing stocks fell like 80% in 3 weeks because they were pricing in like another, like you said, Great Depression or 2008. And that's not what this is turning out to be. So now they're snapping back up. We've made a few trades in our option services that have made money from housing, industrial, semiconductors. It's a great way to kind of make really quick money in trades right now.
Right, and also another amazing thing that happened was that retail sales came out, I believe it was 2 days ago. And while if you went on, the gloom and doom sites, which is pretty much every site on the internet on finance, MarketWatch, for example, it's like, oh, negative 8.7. And you and I were like, whoa.
Yeah.
I mean, in other words, so like 91% approximately of all purchases still happened relative
Yeah.
to last year, which was a kind of strong year.
Yeah. Even considering that a bunch of businesses got shut down. So there were less places to spend money, but still over 91% of money was spent. It's just the transition in where it's being spent. So people are still spending money. That's the key that we want to take away from that.
Yeah, and Amber put up, and we'll put up the slide for a second, this category that is actually up year
Yeah.
over year, up 3%, which we believe approximately captures e-commerce, internet sales, which is those have been booming. And in fact, there's entire categories of things, of course, like, grocery sales skyrocketing,
Yeah.
general merchandise has been skyrocketing. I'm certain that as the video game companies come out, you'll see that, their sales were skyrocketing. And we know that the online platforms, that we've, like Slack and Zoom, and they all have seen like exponential massive growth.
Yeah. And of course, there's telemedicine too, which has become like one of the biggest winners from this. Now you see like millions of people are getting doctor's appointments or, checkups over the phone, which is really, really convenient in a lot of ways. And now that's one of the ones being like boosted the most from this.
And then I'm sure you saw that the company that employs us sent us an email yesterday talking about how we can do dental now by
Yeah.
telemedicine.
Yeah.
Which
I
is
know.
innovation. So, I mean, speaking of, so we have said that, in our judgment, we believe that there's going to be a V bottom. In other words, a spike down and then a spike back up as we move into normalcy. And so it's one reason why actually last month I put an industrial stock in, which has rocketed right back up. And then in housing, we've done a number of trades in both of your services, in Rapid Profit Trader, Rebound Profit Trader, which are both incredible option services that Ian and I run. And then very recently, we've spec'd out what I believe is a really interesting trade for how the world is going to come through. And, I'm just going to set this up and then you can talk about the trade a little bit, which is that most people are so focused on now. However, we, as always, here are the America 2.0 headquarters of the world, really. We are always looking out the future. And so the one thing that we were talking about is that, number one, we're at home consuming stuff and we haven't been making much of it. So we're stocking it up to some extent, but we're also using a lot of it. In the meantime, business inventories are just sinking, crashing, right? And so we got to go back to making stuff. We got to go back to getting those inventories filled, while when we come back, we're actually going to rise our consumption. So it's going to be into a rising moment of consumption where there's no inventories. So this is the underpinnings of the V bottom. In other words, production is just going to ramp. Capacity utilization, which has been still a little bit kind of punk really since 2008. It's coming at 65 to 80 at max. It's going to go to 100% around the world. And we have an incredible thing that we have found. Okay, and now go lay it out for folks.
Yeah, so we were talking about cyclical. This is probably the most cyclical industry in the world, and it's shipping. So like actual ships going across the ocean, delivering all kinds of, necessities, metals, coal, food, everything in bulk. So this is an industry that's really faced a worst case scenario with a lot of countries being shut down, warehouses being shut down. They can't store it because nobody's working there. Way fewer people are working at the actual ports for these ships. So there's like a huge bottleneck going on in shipping. But that's starting to kind of dematerialize. Now people are going back to work. Countries are opening back up. They're opening their ports back up. So shipping is going to really pick up because, like you said, inventories are down. People need supplies like quickly to avoid a real crisis. And so this is an area where we've scoped out a few stocks that we're going to be recommending in our $10 million portfolio service. So this is really one of the biggest areas. Like I said, it's the most cyclical industry you could possibly get in on.
Right. I mean, and the shipping business is completely, they fund it completely with debt. So the stock actually represents, it's much closer to an option than actual equity because, they fund all their ships with debt. And so at some point in time, once the interest payments are paid off, it's also very powerful because all the profits just drop the bottom line and these stocks rocket up. And as Ian mentioned, these are going to go in. When do we think we're going to have these trades out, Ian?
It should be by the end of the month for sure. And another thing, yeah. So like the fees that people have to pay for the shipping have plummeted because there's way less going on in terms of people working at the ports. There's not enough room for the ships to come in. So now that that's picking up, they're also getting paid more. So that's like a double bonus for them. We're seeing an increase in that. We're seeing there's less ships, so less supply while demand picks up. We always talk about scarcity being one of the main drivers of price. So a lot of these companies have scrapped their ships. So there's less going around. So we found companies that have not done as much of that. They have some of the biggest ships in the world. They have the biggest fleets. They're going to be the ones that are in demand, and their stocks have fallen like 90 or more % from their highs. So there's so much room for growth here. And so this is a really, really kind of unique setup for a trade. And it's a unique trade in general because you never really hear much about shipping stocks, but this is definitely the best opportunity we've seen in a really long time to get in on these.
Yeah, and we could make an extraordinary amount of money in a very quick period of time. In many ways, they got hit by the perfect storm.
Right.
Obviously the rates went down and the volumes went down. And so they just parked these ships. And, being that they're funded with debt, you still have to make the interest payment or go bankrupt. However, on the flip side, there's going to be the perfect recovery.
Right.
The greatest recovery in the history of the world. That's what I believe, which is that we're going to go have this sharp down. And then what is going to shock people because of what we laid out, which is that we have consumed all the inventory. So we got to go and remake all of that. So capacity utilization's up, and that means production everywhere all around the world is going to skyrocket. And even better, we're going to be in the position where the businesses have to restock to get their inventories to where they can continue to supply their customers and have enough. And then the businesses that are using it will also build some amount of inventory because for 20 years, Ian, we have run on the idea that we need to keep no inventory on hand.
Right.
No inventory. So that means that, there's going to be like more stuff that's kept at every business. And then we're into rising incomes. And as we come out, we're also going to have rising consumption. So this is in truth, Ian, the greatest environment for investing that I've ever had in my life. And in general, people continue to be incredibly pessimistic.
Yeah, I know that's the trend that we're in right now is pessimism, but the market is clearly not mirroring that. So people are buying stocks, but you never know it just by looking at what's being put out there in financial news.
So, I mean, to get, as Ian mentioned, we're not quite there in terms of issuing these shipping trades. So if you want to get on it, here's what you need to do. Sign up for Bull Profits Daily, which will be in the information in this video if you're watching it on YouTube. Otherwise, and so that way you'll be on our mailing list. And then for those folks that are getting this, because you're part of Bull Profits, we'll include a link so you can subscribe to the $10 million portfolio. That way, when Ian puts these incredible trades out, very unique, I believe they're going to be probably the most profitable trades that we've done in a while. So you can get access to them the moment they come out because we believe that these are going to be incredible money spinners, incredible money spinners.
For
All right,
sure.
so we've done the market, and in general, I mean, we've been saying pretty much through this crisis that we are BOP, which is the hashtag that I created on Twitter. I'm at Mampilly Guru. Ian, you go for it now.
Yeah, so I'm at Ian Dyer Guru on Twitter. Yeah, we tweet about, mostly the market, pot, Bitcoin, Tesla, any kind of updates with that kind of stuff.
And while we're doing plugs for various social media, also please subscribe to our channel, give this video a thumbs up, comment below. And we are bullish, optimistic, positive. We've taken our share of grief for it, both on Twitter and on YouTube.
Yeah.
However, thus far, we have been vindicated by our stance, which is that we felt that this was a panic, that this would pass through given the nature of what was unfolding. And it is now coming to pass, as we mentioned, which is that there's now guidelines for opening up the economy. We are beginning to see cyclical activity start to pick up all around the world, housing, industrials, etc. So we are still BOP.
For sure. Yeah.
And we've been doing a lot of trades in our option services to benefit from that.
Right, exactly. And some of those, options have been, they're really volatile. So some of them have been down like a lot, but we've actually sold them the past couple of weeks for profits. Like I think we've taken profits on 7 trades in the past week.
Right. I mean, and so, we also want to plug America 2.0, which is that as we go into what I believe is going to be the greatest recovery, the perfect recovery in the history really of the world, what will you really want to own? And we believe you want to own America 2.0 stocks. America 2.0 stocks represent the future, represent really the ways that we are going to move forward as we come out of this. These are also the stocks that are going to go to their old highs and then make new highs because they are seeing rising adoption, rising sales. Their brands are relevant. Their products and services really represent our time. They are represented by the mega trends. They're also represented by the rising generation really around the world, the millennial generation coming of age. And you want to get in America 2.0, there's never been a better time. This is the greatest time. Click on the strong hands above. That will take you to my video presentation, America 2.0, give you an incredible stock for you to get in, to participate in the greatest recovery, the perfect recovery, and which also represents a form of technology and manufacturing that I believe is going to become the default. So this stock can really skyrocket up. So click on the strong hands above, and that will take you to a video presentation, give you all the details on America 2.0. All right, Ian, let's do some of our regular roundup. Let's start with Tesla. Let's start with Tesla, because that's a signature America 2.0 stock.
Yeah, it is. I mean, they're the most advanced company, of course, in terms of battery technology, in terms of AI with their self-driving car features, and in terms of EVs, which are 3 of the fastest growing markets in the United States and in the world right now. And they're expanding their business. They got into China. They're selling a lot of cars in China. They have like a 30% market share now. And China actually, during this, saw their car overall auto sales like way negative, but Tesla actually increased their auto sales in China despite the lockdowns, despite all the coronavirus panic. They're actually doing better than ever in China. So we don't expect them to really take much of a hit from this at all. And their stock is showing that too. Their stock is back over $700 a share, almost up to new highs, which we expect it to hit with $1,000 this year was our original prediction. But I mean, this seems like too easy now after it was down below $200 last May, less than a year ago. But yeah, their business is booming. They're doing really well. They're coming out with the Model Y this year, the Cybertruck next year. So they've got years and years of growth ahead of them. I'm sure they're going to announce something after that as well. So they're set up right now to keep running as they are, despite, what you hear that is ridiculous, that their market cap is so high, that they're worth more than Ford and GM, even though they sell less cars, completely taking out the factor that they're one of the most innovative companies in the world with AI, batteries, and EVs. So we're still very, very bullish on Tesla.
Yeah, I mean, and coming out of this, the part of Tesla that I believe that we really want to pay attention to is going to be, as you said, that those robo-taxi business autonomy. because I actually just recently got a software download for my Tesla, and I can tell you autopilot has jumped.
Yeah.
It's more capable than like since I've had this car for about 2 years. And I'd say that, it was when I originally got it, was at 5 or 6, and it's now closer to 7 or 8. In other words, its
Yeah.
ability to follow the road, to make decisions on the road is much closer to the experience that you would want, that as a person sitting there, you feel comfortable with in terms of how it merges, how it moves out of a lane, how it can pass cars. So I believe that this crisis is going to actually move that industry along, where people will want more autonomous cars, because we understand now it's just that there can be something like coronavirus, and God forbid, Ian, that it was really as fatal as it was modeled by people. So people say, well, we do need to be mindful of this, but people are going to want their own individual transport, and the cheapest way to implement that is through autonomous vehicles.
For sure. Yeah. And like you said, autonomous taxis are for sure going to be a big thing, especially when, you can get a Tesla and have it go do taxi services on the side, and you can actually make money from that as like a side job.
That's right. No different than renting a room in your house or something like that. It's very similar to that.
Yeah.
And then there's also, they're going to, I believe that the EV revolution will also going to take off, because I feel based on like any number of things that I'm seeing, it does look like the number of people that are going to come to buy cars have a strong preference to want to buy an EV.
Yeah.
So there's going to be a huge demand for Tesla Model 3 for sure. That Model Y is going to just fly. It's already, I believe, based on pre-orders, a huge seller. And then the Cybertruck, and then there's also Tesla Semi. And then, we're not even talking about the battery business and its solar roof business, which is also going to be on fire, because all of those things are things that were in place before. And as we come back, the demand for that is just going to rocket up. So $1,000 for Tesla, and the $4,000 that's been set out as like a 3 to 5 year target, I believe is achievable, and I believe is going to unfold.
Yeah. Agreed. 100%.
Yeah, so let's do Bitcoin, because now we're getting ever closer to the halving, which when we first started talking about this, the halving was supposed to happen really by the end of May. Like I had dates that were as far out as May 31st, May 30th, like end of May. And I've now seen a halving clock estimate that is now as far up as May 3rd. So like, in other words, like we've been talking about this, the miners are sort of seeing that the reward for solving the puzzle for Bitcoin, which generates the reward with that being halved, they are starting to accelerate how much mining they're doing.
Right. Yeah. And, Bitcoin is also being hoarded as we speak. Yesterday, I tweeted out a link. If you didn't see that, it was talking about how the number of addresses with more than 1,000 Bitcoins at a 2-year high. And it's doing exactly what it did before the last halving, and before the price of Bitcoin went from like $200 to $20,000. So the supply is not only going to be reduced by the halving, which cuts the rewards for mining in half. So people only get 6.25 Bitcoin instead of 12.5 every single time they mine a block. But it's also, the supply is going down because people are hoarding it. I mean, I think it was 1,800 addresses with over 1,000 Bitcoin each. People are absolutely hoarding Bitcoin right now, driving the supply down. Grayscale, which is this really, really big Bitcoin investment company that has a lot of funds in crypto actually, but they reported that they have had record demand for their products too. So they now have, I think it was over like 1.8% of all Bitcoin, I think, is now owned by Grayscale. So they're one of these huge, Bitcoin holders called whales that are just really just coming in full force right now, driving down the supply of Bitcoin, which is going to push the price way up going forward.
Yeah, I mean, actually, I saw that Grayscale announcement. So they took in across crypto. So they are the world's largest digital asset manager, assets, and they took in $503 million in the first quarter for crypto. And I believe of that, 388 million went into their Bitcoin trust.
Yep.
And so it tells me one thing, Ian, which is that, from looking at what usually happens in halvenings, which is that the miners start to ramp up their mining, and then most miners run a pretty low margin operation, so they need to sell their Bitcoin pretty much as soon as they mine it. And there's obviously been a ready market for it. I mean, if 388 million has been sucked in by
Yeah.
Grayscale alone, and
Right.
then you think of even like what this crisis has done to countries around the world, where a number of currencies, which happens into any period of tightness, will have collapsed, and where people will be like, well, I prefer to be in Bitcoin over any national, paper fiat currency.
Yeah, and the other 115 million that Bitcoin or that Grayscale brought in for their other cryptos was like a huge, destroyed the old record for non-Bitcoin cryptos or altcoins. So this gives us a sense that there's huge demand for these other smaller cryptocurrencies as well, and that's going to give us like way more opportunities to invest going forward in crypto.
Well, I mean, it's coming pretty close. I mean, we're theoretically, if the earliest halvening clock is right, May 3rd,
Yeah,
that's like just 16 days away, approximately, something like that. Even if it's mid-May, we're about a month away.
yeah,
The one thing is that everyone will believe that Bitcoin can crash whatever from 10 to 3,800, like it did in March, or something in that range. Now, no one can believe that it can jump up. And I said the same things about various stocks to folks in Profits Unlimited in my updates. Like, everyone is willing to believe that a stock can drop, but no one really can believe that something can jump. And I believe the same is going to be true for Bitcoin, which is like when it jumps, people say, oh, I should have bought in. I should have
yeah.
bought in.
Yeah, and that leads to the whole demand at higher prices thing, which is a major force in Bitcoin. Nobody wants to buy it at 5,000, but when it gets up to 20,000, everybody's going to be buying, and that's going to drive up the price even faster. So it's going to be like an exponential increase once it really starts to get going.
Right, and that's like and into that there's less supply on an organic level in terms of mining, and there's less supply in terms of a market perspective, in the sense that people that are holding it are not planning to sell, because they're like, well, why would I sell? Like, I know it's going much higher, so I'm going to keep it.
Right. Yeah, exactly. It's a completely amazing scenario right now for Bitcoin to buy in.
Right. All right. So we've done all of our usuals. And the last one is cannabis. And you had mentioned Afria reported. So tell folks what they're telling you, which is like confirming
Yeah.
what we've been saying.
Yeah. So basically, their business is doing great, not unlike a lot of other pot businesses. But Afria reported that their sales have grown 100% year over year. Meanwhile, their stock is right near like all-time lows. It's gotten beaten way down, and the company is valued at an extremely low level, considering that it doubled their growth in sales in the past year. So, these pot stocks we've been talking about some of them have really had to temper their growth a little bit because they try to get too ahead of themselves. They were kind of growth at all costs to begin with, but they found out quickly that the expenses of doing that were too high for the amount that they were able to sell. Afria is one of the ones that didn't quite do that. They kind of just were slow and steady throughout the whole thing, and that's really turned out to pay off, but their price has still gotten beaten way down. But overall, the marijuana industry is doing amazing, especially in the US. And we've said before about how, more states are going to legalize it once they see how much states are bringing in tax revenue. California and Colorado have brought in billions of dollars in tax revenue just between those two states alone. So there's a lot of money to be made, not just by investors, but also by state governments in this sector. So that's really going to help sales down the road. It's going to help more companies open as more states legalize. The U.S. is a great market for this. And Afria is kind of, I think it's really one of the first dominoes to fall in this earnings season, where people are going to realize that this is not as bad as the stocks are factoring in, which is basically that these companies are going to go bankrupt. But that's really not a practical case to make, considering what's happening with their growth.
And then, I mean, last week we mentioned that Hexo, they found investors to buy $45 million worth of stock. So investors get that, the most important thing in the business is that you need people to want what you are selling. Without that, there is no business. And
Yeah.
so this is not a problem that cannabis companies have.
Yeah, and that was like I think the fourth time in the past few months that Hexo has managed to get like tens of millions of dollars from investors to sell their stock to. So I mean, Hexo was one of the most beaten down stocks. So if they can pull that off, getting over 100 million overall in the past few months from outside investment, then that's a great sign for the marijuana sector as a whole.
And those investors are what we would call strong hands because
Yeah.
they know, I mean, what they're buying, and they're not going to sell for 10% more, 20% more. They're looking to make hundreds, if not thousands of percent.
Right.
So usually those kinds of things, usually mark a bottom. And MJ, I believe, has not made a new low in any time recently.
No, it went down, I think it was last month was like the 9th straight negative month that MJ had,
Right.
which when you consider again, the growth makes almost no sense. These stocks were already beaten down and then the whole coronavirus panic happened in the market, sold them off even more. But I see that as an even better chance to buy in. And like I said last week, 100% positive that MJ has bottomed for good, and I'm going to keep sticking by that.
Yeah, and the demand and supply balance in terms of the stock is now firmly in terms of those who own it. So people, if you want to come and own it, you're going to need to bid the prices of these cannabis stocks up. So that's a very, very bullish, optimistic scenario.
Absolutely, yeah.
All right, Ian, we've covered this and we've covered a lot of ground here. So you go first, and I'll wave everyone goodbye.
All right, everybody. Happy Friday. Hope everybody has a great weekend. And I just hope that everybody is still, being strong hands in the market. Keep holding on. This is continuing to get better, and we see it getting even better from here.
And we'll have another IanCast for you next week. Until then, this is Paul saying bye.